Hi, I'm Mary Lyons, the Wealth Woman.
I'm Eric Alexander with the Benchmark Income Group.
Welcome to the Big Wealth Podcast. We're excited to have you with us today. Today, we're going to talk about the four horsemen of the apocalypse, I think is what you call them, Eric.
The financial apocalypse, right?
Yeah, the 4 Ds that can totally disrupt your financial plan. So, Eric, why don't you kick us off with the first one?
Yeah, so there's 4 of these, and these are all wonderful because they're the 4 horsemen of the apocalypse, not the 4 horsemen of the cool things coming, right?
Yeah, I would not call them wonderful. Let's use a different word.
So one of the first ones that I wanted to talk about was this idea of disability, right? So if we're keeping with the D theme, and this is one of the big ones because it comes in so many different forms. It's medical expenses. It's an accident that's sort of changed your life. It is all of the bad things that sort of pull you out of work, right? That eliminate your ability to go and produce the income that you're used to. And the challenge is, as someone once told me, is that the best thing, or of all the bad things that can happen, disability is almost the worst, because if you're dead, you're not actually requiring revenue anymore. You're not producing, but you're not also requiring. I think disability or a big medical problem could be almost worse because you're not producing. And usually if you're really, really sick, you're also taking. And
right.
So,
your expenses go up.
Yeah. And so that's a big one. And so one of the couple of the key things you can do to prevent that, and one of the things you can do to make it better, is all the kind of gross stuff that we don't like to talk about, but we all need. Really, really good health insurance with good backup plans and all that, right? And really good disability insurance, so that if you don't run out of birthdays, but you run out of days to produce income, you've got money coming in to make life okay. And it's never going to be there to make you completely whole. That's kind of not its job. But if you can have revenue coming in to weather the storm, you can avoid big problems.
Right. And I think there's a big difference too on disability of understanding if you have a group plan versus an individual plan. Yep. Because whether your employer is paying for it or you are, because all of that affects taxability. An individually owned policy that you're paying for yourself creates a tax-free benefit. If your employer is paying your premiums for you, then potentially your benefit is completely taxable. So a lot of times I think it makes sense not just to look at what you have at your company, but to add on a layer of individually owned coverage to make sure you get as close as you can to income replacement. And then also to understand that sometimes the employer paid disability benefits are for a fixed period of time, not for your working lifetime. So it may only be for 2 years or 5 years. As opposed to until age 65 or age 67, or in some cases, even age 70. So just knowing the differences there. And then, also if you ever do have those conversations about what type of insurance is available for that, understanding that not all carriers have the same contracts, right? I think the rule of thumb is you get to control 2 variables and the insurer gets to control one of them, right? So you have cost, you have the benefit amount, and then you have the definition of disability. So if you want really inexpensive and a really high benefit, probably there's going to be a very strict definition of when you are disabled, right? But if you want the best possible contract language and definition of disability, and you want the best benefit amount possible, you're probably going to pay a high premium. So just understanding how that whole process works, I think is key.
Yeah. All right. What's the second one, Mary?
Okay, so I think I'm going to go with debt on this one. Debt is a huge destroyer of wealth. And I think sometimes people get into debt almost unintentionally. So there's 2 ways that we see this happen. One of them is not working within a budget or overspending. And that can happen at any income level. We see people sometimes that have 7-figure incomes who are overextended because they feel like, I'm rich, I can afford it. And then they aren't watching the budget. And then things sometimes get out of control. And the other way that we see debt show up sometimes is the idea of leverage, where people end up over leveraging in order to get into investments and with terms that they don't really understand. So an example of that, Wells Fargo recently changed their rules on personal lines of credit. And for anyone who had a personal line of credit, they amortized the loan. So now there's a fixed payment period, and it's not just interest only on a revolving line. So when you don't read the fine print of the debt that you are potentially getting into, there could be abilities on the back end for the contract to be changed. We also saw that being an issue through 2008 time period, shortly after, because banks didn't want commercial real estate on their books. And so quite a few commercial real estate loans had provisions that allowed the banks to call the notes due within a 30 to 90 day time period. So here you are, you got a vacant building, your cash flow goes away, and all of a sudden you got to pay off a multi-million-dollar loan. That can be a huge problem. So really being careful with the debt that you do take on, and when you choose to leverage, making sure that you understand, and what do you call it, Eric, a black swan event, when the world is on fire, and everything is kind of coming tumbling down. What is your worst case scenario, and do you have an exit strategy for that? Because there's a time when leverage can be good, and there's a time when it can absolutely destroy a financial plan.
Yep. And then the third one, I think, in this list, they always say that marriage is grand and divorce is $100,000. And so I think one of the things that happens a lot of times, and we see it so many times, it's really unfortunate and sort of sad, but you go through that process and we think through divorce from a standpoint of financial, but there's an emotional end on the other end of it that says, I'm writing out checks, right? I've just given my former spouse thousands upon thousands of dollars out of my 401k, or I've liquidated this account to go give them something, or now we've got two homes where we used to have all our money buying one, right? And so you've got some of the cash flow changes that have come around. And then I think one of the things that happens on the other end of it as you're sort of trying to rebuild is you're trying to figure out who you are again. Like, okay, where do I live in this space? What does that look like? And you're dealing with sort of the emotional fallout. I mean, it's from what so from the things I've read and experienced and everything else, it's about as close to death as you're going to get without having somebody actually die, right? It is an extremely traumatic environment and incident. And so there's some fallout on the other end where you may not be making good choices on the back end of that, right? You're not thinking long-term as much as you were. You're not thinking about saving and building and growing. You're thinking, man, I just went through this horrible environment, this horrible event, and the world is in chaos for the next probably 6 months to a year. And so
it's almost like triage. You just got to deal with the thing right in front of you because you can't see past it yet.
Yeah, you can't see past the hurt, the pain, even if it's something that you wanted, right? There's still an emotional fallout, right? And kids and therapy and everything else that start to come in and sort of suck away money. So from a preventative measure, the thing I'm sad about is that there's no pill to take. There's no insurance product to buy to make the cost go away, but
there's no divorce insurance.
There's no divorce insurance, right? But I think part of it is sort of making sure that you don't neglect that relationship. And that I think a lot of times, especially for guys, we get soaked up in doing the thing, right? We're working, and I think all of us do this, not men, just I think all of us. And we forget to take care of the people at home, right? And so
nurture the relationship.
Yeah. So that's your insurance policy is make sure you're taking care of the people at home.
Yeah. So, and I will say, just from experience working with clients, man, divorce wipes people out, and they really are starting over. And I think the thing to remember with divorce is that when you are starting over, efficiency of your financial plan is more important than it ever was, because you don't have the same amount of time on your side. Right. And that's a conversation that we have all the time. It's not about taking more risk. It's just about being more efficient to rebuild at that point.
Because you don't get divorced the second time when you're 22 and you got your whole working career. You get divorced later, right? Typically.
Right. So, so the fourth one is death, which nobody likes to talk about. This is a very morbid episode. I think we're talking about all the bad things, but I think being very grounded in reality allows people to make good decisions. And then once they've dealt with these things, they don't have to think about it again. I mean, the thing that makes me sad is that I've seen, even within my own neighborhood, when somebody passes away, there's a GoFundMe page to make sure that like the kids get to go to college, and the remaining spouse isn't having to sell their property and can stay in the neighborhood with the kids. And it's nice to see the community rallying around someone who's in that position, but frequently, if people made better decisions about their insurance when they were younger, they would not end up in that position. And that's the thing that's always hard for me watching that happen, is that it's a preventable position, because especially if you're young, life insurance is really inexpensive, right? I mean, you can get a whole lot of it for not a whole lot of cash flow. And I think it's important, if you're willing to spend $100 or $200 on your cell phone bill, you should be willing to spend that much on a life insurance policy, so that in the event you lose a spouse, you still have income continuation. And then even within that conversation, people always ask me, how much insurance should I have? And I think it's a matter of what you want. So there's two schools of thought. One's needs-based, which is just, I need to be able to pay off the mortgage and, fund my kids' college and have a couple years of income. And the other is, what do you actually want to have happen? And there's a concept called human economic value, which is basically full income replacement. And in that situation, the insurance policy pays out a lump sum, but that lump sum is enough that when invested, it will throw off the income of the person who has passed away or close to it for the rest of what would have been their working lifetime, or potentially even longer. And usually you can only get to like 60 to 80% income replacement, because no insurance company, even if you say insure me for the most you would possibly insure me for, no insurance company is going to create a situation where you are profiting from your spouse's death. So the idea of being
everyone sleep with their eyes open.
Right. The idea of being overinsured, at least in this capacity, is pretty much non-existent, because you can't, you can't be insured for more than the income that you're bringing home, or a lump sum that would throw that off. So, I think that's the kind of thing we've seen when people make, poor choices there, what happens. And then we have clients that have made good choices and have gotten, if not all the way to human economic value, at least very close to it. And when unfortunately an event like that does take place, I have never had a client say, man, I wish there was less money, right? But they're always happy to have more. Right. And I think that's the thing. We like to think, okay, nothing bad is going to happen. I don't want to think about it. I don't want to bring that juju into my life, or whatever you want to call it. But when you plan for these things accordingly, if God forbid something like that happens in your life, you can deal with what's happening because the money is taken care of. And ultimately, that's the job of an advisor, is to point out, if something goes wrong, let's make sure this is taken care of, because hope, while it is a financial strategy, is not really a good one. Right? I mean, I want people to have hope, but we need contingency plans too.
Well, and to put a nice bow on the end of it, so that it's not all sort of horrible for Horsemen here, right? Especially with the first three, or especially with death as well, but disability and all the rest of it, and I'll use life insurance, right, for the death piece of it. It is the most powerful love letter you could ever write to your spouse, right? Like, I care about you so much that I'm willing to give up money today, so that in the event that anything happens, you never have to worry about life you never have to worry about money for the rest of your life. You're going to be okay, right? And I think it's the same is true with disability. The same is true with health insurance. The same is true with making sure you're being a good husband or wife, right? That's no better love letter, right? And the same thing is true with sort of the debt piece. Like, we're going to manage this today, and we're going to be smart about it. We're going to be prudent about it, because I want life to be smooth for you. I want life to be okay for you. And I'm thinking through the lens of being a husband and a dad, right? And sort of being that protector role, that mental mindset, like that is my job, is to make sure everything's going to be okay. And what a cool love letter you get to write to your spouse, your kids, their kids, that, hey, we were adulting today at a high level, even though we didn't want to. And regardless of what happens, we're going to be okay.
Well, and, just to speak to that, because it reminds me of a client of ours who had a terminal diagnosis, and had 3 years prior to passing away. And because they had done everything they needed to do, both on the disability side of things and on the life insurance side of things, they knew that their spouse was going to be taken care of after they were gone. And because the spouse also knew that in the remaining years that they had together, they really had the freedom to connect and focus on one another and their family, because there were kids as well, without any fear or worry about what life was going to look like on the other side, because they knew that the income was taken care of. And so to watch the person who was terminal, to watch them reside in that space of relief was amazing. And then to watch the spouse who was having to care for this individual and really go through some tough times, be able to put her whole heart into that, I think was and the ability to like take a last big vacation as a family and not be worried about the money. All of those things I think are so key. And I remember having a conversation with her at some point, because there was a community of people kind of going through the same thing. And she said, it is so sad to watch these people sniping at each other and being angry. And I said, you have to wonder if some of that is a resentfulness of, hey, I'm having to take care of you and there's no one to take care of me when you're gone. And so knowing that that piece is taken care of, I think is a really big deal. And I think that's also true with disability. If it becomes, okay, now there's one breadwinner for the family and income's cut in half and lifestyle is totally different. And then there's the burden of caring for someone on top of that. I think that's probably exhausting. Whereas at least if the right things were done so that the income is there, it changes the focus, right? I mean,
there's no resentment.
Connection in life, as opposed to, man, we should have done this differently. And that's the thing, right? I think sometimes we trade what we really want for what we want right now.
Right.
And that's why people ultimately don't have happiness. And I think an ounce of prevention is worth more than a pound of cure.
No doubt.
What I've seen worth doing. So if we can help with any of those things, absolutely reach out to us, shoot us a DM. And we're more than happy to, provide resources or get to know your situation and figure out how we can help. Excellent. So Eric, where can I find you?
On Instagram and Facebook at Economics with Eric, and then on LinkedIn as well.
Okay, so I am on, Instagram and Facebook as @TheWealthWoman, and you can also find me on LinkedIn. We'd love to hear from you. Thanks for joining
a lot.
Today.
Bye.